Hi, this is Rachel Israel with STEM News and Global World Report. We have breaking news that will have a huge impact on the global scene in the very near future. Let's take a look at what's going on around the world.
Troubled waters, small banks facing strong headwinds. Small banks across the United States are facing unprecedented challenges. The U.S. banking sector is showing signs of stress. Financial indicators are flashing warning signals, and the pressure is mounting. Hundreds of small and regional banks are at risk of failing. These institutions are the backbone of many communities, providing essential financial services. These banks are vital to local economies. They support small businesses, farmers, and families by offering loans and financial advice. They provide loans to businesses and individuals. Without these loans, many local enterprises would struggle to survive. The current economic climate is putting pressure on these institutions. Rising costs and economic uncertainty are making it difficult for them to operate. The Federal Reserve has been raising interest rates. This policy aims to control inflation but has unintended consequences for small banks. This is an attempt to curb inflation. However, the higher rates are making it more expensive for banks to borrow money. However, higher rates also make it more expensive to borrow money. This affects not only the banks but also their customers. This puts a strain on borrowers, including banks. Many are finding it hard to keep up with the rising costs and financial obligations. The situation is causing concern among regulators and industry experts. They are closely monitoring the developments and considering measures to support these vital institutions. Klaros Group sounds the alarm. Hundreds of banks at risk. The Klaros Group, a renowned financial research firm, has recently sounded the alarm on the stability of numerous banks across the country. Their latest report highlights a growing concern within the financial sector. Klaros Group, a financial research firm, has issued a stark warning. According to their detailed analysis, a staggering 282 banks are currently in a precarious position. This revelation has sent shockwaves through the financial community. Their analysis shows that 282 banks are in a precarious position. These banks are particularly vulnerable due to their significant exposure to the commercial real estate market. These banks have high levels of commercial real estate exposure. This means they have lent heavily to property developers and investors, making them susceptible to fluctuations in the real estate market. This means they have lent heavily to property developers and investors. The commercial real estate market, however, is currently facing significant headwinds, which could spell trouble for these financial institutions. The commercial real estate market is facing headwinds. Higher interest rates are making it more expensive to finance projects, and the demand for office space remains weak after the pandemic. Higher interest rates are making it more expensive to finance projects. This has led to a slowdown in new developments and has put additional pressure on existing properties. Demand for office space remains weak after the pandemic. Many companies have shifted to remote work, reducing the need for large office spaces and further exacerbating the challenges faced by the commercial real estate market. This combination of factors is putting pressure on property values. As property values decline, the financial stability of these banks becomes increasingly uncertain, raising concerns about potential ripple effects throughout the economy. The perfect storm: commercial real estate and rising interest rates. The commercial real estate market is facing unprecedented challenges. With rising interest rates, the cost of borrowing has increased significantly, making it more expensive for developers and investors to finance new projects or refinance existing ones. The rise in interest rates is a double-edged sword for banks. While higher rates can lead to increased profits from loans, they also pose significant risks. On the one hand, it can boost their profits on loans. Banks can charge higher interest rates, which can improve their margins and overall profitability. On the other hand, it increases the risk of borrowers defaulting. Higher interest rates mean higher monthly payments, which can strain the finances of borrowers, especially those with variable rate loans. This is particularly true for commercial real estate loans. Many commercial properties are financed with adjustable rate mortgages, which can see significant payment increases as rates rise. Banks are required to hold capital reserves. These reserves are essential for maintaining financial stability and ensuring that banks can absorb potential losses. These reserves act as a buffer against losses. They provide a safety net that allows banks to continue operating even in times of financial stress. When loans go bad, banks need to write them off. This process involves removing the non-performing loans from their balance sheets, which can have a significant impact on their financial health. This reduces their capital reserves. As reserves dwindle, banks have less of a cushion to protect against future losses, making them more vulnerable to financial instability. If reserves fall too low, a bank can become insolvent. Insolvency means that a bank can no longer meet its obligations, leading to potential closures and significant economic repercussions. Section 4. Community banks in peril. A threat to local economies. Community banks play a vital role in the U.S. economy. They serve small businesses and local communities. These banks are often deeply embedded in their communities. They understand the local market and the needs of their customers. The failure of a community bank can have a devastating impact. It can lead to job losses and business closures. It can also make it harder for people to get loans. This can stifle economic growth and opportunity. Section 5. Echoes of 2008. Sheila Bair warns of more bank failures. Sheila Bair is the former chair of the Federal Deposit Insurance Corporation, or FDIC. She oversaw the banking system during the 2008 financial crisis. Bair is warning of the potential for more bank failures. Bair argues that the current situation has some similarities to the lead-up to the 2008 crisis. She believes that regulators need to be vigilant. They need to take steps to prevent a repeat of that crisis. The consequences of inaction could be severe.
I'm diving into the crazy world of finance to see if hundreds of U.S. banks are really on the brink of collapse. Let's find out together. The potential collapse of hundreds of U.S. banks is a topic that should concern every single one of us, regardless of our personal financial situations. It's not just about the banks themselves, but about the ripple effect it could have on the entire economy and our daily lives. Imagine waking up one morning to find out that your bank, the one holding your life savings, is on the verge of shutting down. It's a scary thought, and it's something that we need to talk about. When we take a closer look at the current state of the banking industry, there are several warning signs that can't be ignored. One of the major contributing factors is the economic downturn we're experiencing. With interest rates rising and inflation on the rise, many banks are struggling to stay afloat. Add to that the increased regulatory requirements, and you have a perfect storm brewing. Banks are finding it difficult to generate revenue, and their profitability is taking a hit. In fact, according to a recent report, many banks are barely scraping by, with some even operating at a loss. Another factor is the rise of fintech and online banking. While this shift is convenient for consumers, it's also forcing traditional banks to rethink their business models. Many are struggling to keep up with the changing landscape, and it's showing in their financial performance. It's no secret that the banking industry is ripe for disruption, and those who aren't adapting fast enough are paying the price. With declining revenue and increasing costs, it's no wonder many banks are finding it tough to stay in the black. But it's not all doom and gloom. Some banks are trying to innovate their way out of this crisis. They're investing heavily in digital technologies and trying to find new revenue streams. However, for many, it may be too little, too late. The damage has already been done, and it's only a matter of time before we see the effects. It's a delicate balancing act, and one wrong move could spell disaster for these financial institutions. Take, for example, the case of a regional bank in the Midwest. Just a few months ago, it was reported that they were struggling to meet the regulatory requirements, and their stock prices took a hit. Since then, things have only gotten worse. Their profits have plummeted, and investors are getting nervous. It's not an isolated incident, either. There are many banks across the country that are facing similar challenges. It's only a matter of time before we see the first domino fall. According to experts, the situation is far more dire than we're being led to believe. One economist recently stated that we're on the cusp of a massive banking crisis, one that could dwarf the 2008 financial crisis. The warning signs are there, and it's up to us to heed them. It's not just about the banks themselves, but about the broader implications for the economy and our personal financial safety. If we don't take action soon, we could be staring down the barrel of a financial catastrophe. The thought of hundreds of U.S. banks collapsing is a daunting one, but it's something we need to confront head-on. The experts are sounding the alarm, and it's up to us to take notice. We can't just sit back and hope for the best. We need to be proactive, we need to be vigilant, and we need to demand more from our financial institutions. The clock is ticking, and it's up to us to take control of our financial futures before it's too late. In conclusion, the potential collapse of hundreds of U.S. banks is a very real threat, and one that we need to take seriously. It's not just about the banks, it's about us, the consumers, and our financial well-being. We need to be aware of the warning signs, we need to stay informed, and we need to hold our banks accountable. Thanks for watching, everyone. What do you think about the state of the banking system? Do you think we're heading towards a financial crisis? Let me know in the comments below. And if you want to stay ahead of the curve, be sure to check out my next video for more insights into the world of finance.
Well, that's the news for tonight. Thank you so much for continually supporting our content. If you did enjoy this video, hit the thumbs up button, subscribe and turn on the notification bell, and share this with your friends and family. I'm sure they would find it interesting as well. We're very excited to continue this journey with you. We thank you all for bringing certain stories to our attention, and for continually keeping us updated with certain events around the world.